So let's dive into a fascinating showdown in the world of cinema, AMC versus IMAX. Now, on the surface, you'd think they're just partners, right? Two giants working together to shape how we all watch movies. But if you look a little closer, you'll see they are playing completely different games in a high-stakes battle for the future of the big screen. It all starts with a bit of a puzzle. Let's say, back at the start of 2020, you put $100 into an investment in IMAX. Well, that investment would have more than doubled by now, and as you can see from this chart, it didn't just keep up. It blew past its peers and even the major market indices. That's a pretty incredible run for any company, especially one in the movie business. At the exact same time, IMAX's biggest partner, AMC, was on a totally different kind of ride. It basically became the poster child for meme stock volatility. We're talking about a situation where online hype, not just business fundamentals, sent its stock on an absolutely wild roller coaster. So that brings us to the big question. How can two companies that are so closely linked have such wildly different stories to tell? Well, to really get to the bottom of this, we need an analogy that cuts right to the heart of their business models. And it's pretty simple. Just think of it as a battle between a landlord and an architect. Believe it or not, this one idea explains almost everything. Let's break that down. On one side, you've got AMC, the landlord. They run this massive real estate empire. We're talking over 9,600 screens all over the globe. Their cash comes from selling tickets and, maybe more importantly, from selling us popcorn and soda. But, and this is a big but, owning all that physical real estate comes with huge costs, and as we're going to see, a mountain of debt. Then you have IMAX, the architect. They don't own the buildings. They design the premium experience inside the buildings. They license their powerful brand and their cutting-edge technology. It's an asset-light model that's flexible and just built for high profit margins. And you know, this whole landlord versus architect thing isn't just a cool theory. It shows up big time when you look at the numbers. The 2025 financials really lay bare two completely different playbooks at work here. First off, AMC's scale is just staggering. In 2025, they're projected to pull in $4.8 billion in revenue. No question, they are the undisputed giant in this comparison. Now, let's look at IMAX. Just $410 million in that same year. So yeah, AMC's revenue is more than 11 times larger. But as you're about to see, revenue is only half the story. And that leads us to the most important question of all. Does bringing in all that money actually translate into profit? This is where the story takes a really sharp turn. This table right here says it all. Take a look at the adjusted EBITDA margin. That's basically a measure of how much profit they make from their main operations. AMC's is at 8%. IMAX, a massive 45.1%. Now, look at free cash flow, the actual cash left over after you run the business. In 2025, AMC is expected to burn through $366 million, while IMAX is set to generate over $90 million. It's night and day. Let me put that a different way. For every single dollar of revenue that comes in the door, the architect's asset-light model is over 5.5 times more profitable than the landlord's. That is just a stunning difference in efficiency. So, these completely different financial engines are fueling completely different strategies for growth. It's time to look at the global chessboard and see exactly where each company is placing its bets for the future. AMC is, at its core, a North American powerhouse. More than 3/4 of its revenue comes from this one very mature market. You could say it's their castle, and they are defending it with everything they've got. IMAX, on the other hand, is a truly global player. Almost 62% of their revenue comes from international markets. They've spread their risk around and are tapping into high-growth areas all over the planet. And a huge piece of that international puzzle is Greater China. With 810 systems, it's their single biggest market. Now, this is a massive engine for growth, but as the source material points out, it's also a pretty significant geopolitical risk that they constantly have to manage. Okay, so what's AMC's game plan? It's all about fortifying the empire they've already built. They're spending a ton of money to upgrade their theaters with laser projectors and expand their premium screen offerings. They're also tapping into their huge loyalty program, 39 million households, and getting creative with things like exclusive merchandise and a popcorn pass to squeeze every last dollar out of each visitor. IMAX's playbook couldn't be more different. Their focus is on asset-light expansion, especially overseas. And what's really smart is their Filmed for IMAX program. They get involved right when the movies are being made, which guarantees them a steady stream of premium content. They're also crushing it with local language films and have an incredible market share. Get this, they capture over 5% of the domestic box office with just 1% of the screens. That's efficiency. So, we've looked at the business models, the financials, and the global strategies, and it all really boils down to a fundamental question of risk versus reward. And here is the difference in black and white. AMC is saddled with over $4 billion in debt. They are burning through cash and have had to repeatedly issue new stock, which dilutes their shareholders just to stay in the game. IMAX, on the other hand, is a cash-generating machine. They're profitable, they have solid reserves, and they're so confident they're actually buying back their own stock. This huge difference in financial health forces us to think about a really key concept: risk-adjusted return. See, it's not just about how much money an investment could make, it's about how much risk you have to take on to get that return. Which brings us to the final verdict from our analysis of the source material. An investment in AMC is a high-risk, high-reward bet on a massive turnaround. The potential payoff could be huge, but it means they have to overcome that crushing debt, and you can bet the ride is going to be volatile. IMAX is a more calculated play. Sure, there's risk. It's concentrated in their dependence on partners and that heavy exposure to China. But the reward is clear: steady growth powered by a super profitable, globally diverse business model. So that leaves us with the final question. When we look to the future of cinema, what's it going to be built on? Will it be defined by the sheer scale and physical footprint of the landlord, or will it be shaped by the premium, high-tech, and asset-light vision of the architect? And that's our deep dive into the landlord versus the architect. If you want to get into all the data behind this analysis, you can get the complete source report from HDIN Research right on their website. Thanks for joining us.